Hey everyone, welcome back to Talk Tickers.
It's earnings season.
And you know what that means.
Deep dives galore.
Today we're looking at FIGS, the healthcare apparel company.
They just had their Q4 2024 earnings call.
And the stock, well,
It took a bit of a tumble.
down about 18% actually.
So we're going to break down what happened.
Figure out if maybe the market overreacted or...
If there's some real cause for concern here.
Yeah, sometimes the stock reaction, it doesn't quite match up.
With what the company is saying.
Exactly.
So let's start with the numbers.
Okay, so top line, FIGS reported revenue of $151.8 million.
For the quarter.
That's a 5% increase year over year.
Which actually beat expectations.
Yeah, beat analyst expectations. So not bad, right?
Sounds pretty good on the surface.
But they also reported active customer count was only up 3%.
And revenue per customer actually dipped.
By about 1%.
So that's something investors are watching.
Right. And then on top of that, their guidance for 2025.
They're projecting a low single-digit decline in revenue.
So that doesn't mean things are like terrible.
No.
But, definitely like maybe some caution is warranted.
Yeah, it's a little bit of a mixed bag.
Yeah. So beating revenue expectations for the quarter.
But then signaling maybe a dip in the coming year.
What's going on here?
Right, what's happening beneath the surface.
Where are they seeing strength and where are the challenges coming from?
Well, let's dig into their performance a bit more.
Okay.
One thing that stood out to me was the difference in sales
Okay.
between their scrubwear and non-scrubwear sales.
Right.
Their scrubwear, so that's their, bread and butter.
That's their main thing.
Yeah, that saw a 2% increase.
Okay.
For the third consecutive quarter.
All right. So not explosive growth.
No.
But still positive.
But still positive.
I mean, it makes sense.
Yeah.
In like kind of uncertain economy, maybe.
Right.
Their core product is more stable.
You would think so.
Yeah. But you said non-scrubwear.
Yeah.
What was happening there?
That's where we saw a big jump.
Okay.
Non-scrubwear sales surged 13%.
Wow. Okay.
Seems like they overcame some of their supply chain issues
Okay.
that they were having with their footwear line,
Okay.
particularly the styles they released with New Balance.
So maybe like a popular collaboration
Yeah.
kind of helped boost those numbers.
Limited edition items tend to do well.
Yeah.
So that makes sense.
Absolutely. And it wasn't just footwear, right?
No.
They've also been expanding like loungewear,
Yeah.
outwear,
Right.
which I guess, especially around the holidays,
Makes sense.
makes sense.
Yeah, resonated with customers.
So branching out, finding success beyond just scrubs,
Yeah.
which makes sense if they want to appeal to healthcare professionals, like outside of work too.
Right, exactly.
But how is all this diversification?
Right.
How is this impacting their profitability?
Yeah, that's a great question.
Because margins are always super important.
Yeah.
It's huge.
And it's definitely like one of the areas where they're facing some challenges, right?
Yeah. So non-scrubwear products generally have lower gross margins than their core scrubwear.
Right.
So this shift in their product mix with more non-scrubwear sales contributed to their overall gross margin shrinking
Okay.
by about 20 basis points in Q4.
So the product mix is playing a role.
Yeah.
And they also mentioned, didn't they, like customer acquisition costs and higher selling expenses
You're right.
being a bit of a challenge?
They talked about rising selling expenses, primarily because of their new fulfillment center
Okay.
and higher shipping costs.
Yeah, those are hurdles I feel like a lot of businesses are facing right now.
Absolutely.
So given all this, how are they planning to address these challenges
What's the game plan?
and get back on a more like robust growth trajectory?
Right.
What's their strategy?
Right.
Well, it seems like they're taking kind of a multi-pronged approach.
Okay.
One thing that I thought was interesting was they're pulling back on promotions,
Oh, okay.
like significantly,
Right.
to protect their brand image
Okay.
and encourage full price sales.
So, I mean, that's kind of a bold move, right?
It is, especially when growth is already showing signs of slowing.
Yeah.
So it suggests they're really prioritizing that long-term brand health and profitability.
Over just chasing like the short-term gains, right?
Exactly. It shows that they have confidence in the brand.
Yep.
That they're willing to, take a little bit of a hit in the short term to preserve its value.
Makes sense.
They're also refining their sizing strategy, which they initially planned to roll out earlier in 2025, but are now pushing to later in the year.
So taking a step back,
Yeah.
to make sure they get it right.
Right.
Which, I mean, sizing can be a huge pain point.
Absolutely.
For apparel companies.
Especially online.
Especially online, yeah.
Yeah.
So what else is on their, agenda?
Well, they're putting a lot of emphasis on new product innovation.
Okay.
Particularly a new fabric they're calling
FIONx, okay.
designed for comfort and lower impact environments.
Okay, interesting.
It sounds like they're, directly responding to feedback from customers, aiming to create products that are even more aligned with what healthcare professionals need.
And it's like they're like, where do you wear FIGS?
Right.
Campaign,
Yeah.
Like they want to be a part of healthcare professionals' lives, like beyond just the hospital or clinic. So, yeah.
Interesting to see how this new fabric plays into that.
For sure. And they're not stopping there.
No.
Right.
They're expanding their products line even further.
Okay.
Focus on outerwear, underscrubs, socks, footwear.
Really going for that, like head to toe.
They want it all.
Domination.
Yeah. Healthcare apparel domination.
Ambitious. But I feel like that's kind of their style.
It is.
What about, outside the U.S.?
Yeah.
Like internationally?
International growth is a big focus for them.
Okay.
They announced plans to launch in Japan and South Korea this year.
Okay.
Those are, key markets in Asia.
Yeah. Big healthcare workforce.
Huge and growing.
Growing, yeah.
So it makes sense that they would target those areas.
Yeah. It'll be interesting to see how the brand translates in those markets.
For sure.
Anything else on the expansion front?
They're also building out their Teams business.
Okay, their Teams business. So remind me of that.
So that's focused on selling to institutions.
Got it.
Rather than individual healthcare professionals.
Okay.
It's a smart move. I mean, tap into a more stable, potentially higher volume revenue stream.
It's almost like a B2B play within their existing B2C model.
Exactly.
I like it. And what about those what were they called? The
community hubs?
Community hubs, yeah.
Yeah, they're planning to open at least 2 more of those.
Okay.
Later this year.
So they're going forward with that.
They are. Yeah, they're really pushing that.
So they're calling them community hubs, right?
Yeah.
Because they're meant to be more than just stores.
More than just stores, exactly.
Right, like a place
There's
where
a place to connect.
Healthcare workers can
connect, learn, maybe attend events.
Okay.
It's a way for them to cultivate that sense of community that they've built online.
It's a risky move, right?
It is.
In today's retail landscape.
Definitely.
But, if anyone can pull it off, maybe it's a brand with as loyal a following as FIGS.
I think so.
Okay, so we've covered a lot here.
We have.
In terms of their strategic initiatives. Now let's dive into the nitty-gritty of their financials.
Right.
What's their outlook for 2025?
Well, as we mentioned earlier, they're guiding for that low single-digit decline in revenue for the year.
Okay.
Gross margin is expected to be roughly flat.
Okay.
Which suggests they anticipate some improvement.
Okay.
Maybe in the second half of the year.
Okay.
As that promotional pullback starts to take effect.
Got it.
And total SG&A expenses are projected to decrease.
Okay.
Mainly due to lower stock-based compensation.
So, I mean, are they essentially kind of hitting the reset button?
I think so.
Investing in the future.
Yeah.
Even if it means some short-term pain.
Exactly.
Okay. I mean, what does this all mean for investors then?
Yeah, that's the question.
Did the market overreact to the earnings report? Sending the stock down so much.
It's hard to say for sure.
Yeah.
I mean, on the one hand, you have a company with a very strong brand. Yeah. A loyal customer base.
Yeah.
A solid balance sheet. All good things.
Yeah, those are all good things.
Right. But on the other hand, you have slowing growth, margin pressure, and a challenging, macroeconomic environment.
Sure.
It's a balancing act.
Yeah.
And how this plays out really comes down to execution.
Right.
Can they navigate these headwinds and come out stronger?
All right. So a lot to consider.
A lot to think about.
But now it's time for everyone's favorite segment.
Oh, yeah.
This is not financial advice.
Here we go.
Where we brainstorm some wild but plausible trade ideas.
That's right.
Based on what we've just learned.
That's right.
So hit me.
All right.
What's your wildest idea?
Okay, so we talked about their investment in OGG that AI-powered education platform, right?
Right. Set to launch later this year.
Yeah. What if FIGS takes OGG and creates a subscription-based membership program?
Okay, like a FIGS Prime?
Yeah, like FIGS Prime for healthcare workers.
Okay, I like where this is going.
A subscription model for FIGS.
Okay, I've never heard that before.
It's a little out there.
How would that even work?
Well, think about it.
Yeah.
Exclusive content. Maybe early access to new product drops, special discounts, all the usual perks you see with those.
Right.
But then you layer on things like continuing education credits through OGG.
Interesting.
Maybe they partner with other companies to offer things like insurance or financial planning services.
Specifically for healthcare professionals.
Exactly.
So it becomes less about just selling scrubs.
Right.
And more about building this whole ecosystem around the FIGS brand.
Yeah.
They'll be tapping into recurring revenue, deepening customer loyalty.
For sure.
Becoming like a one-stop shop for healthcare workers.
Right. And it plays to their strength, right?
Yeah.
Strong brand, loyal customer base, and a willingness to invest in innovation.
I mean, it's not completely crazy to think.
It's not that far-fetched to think they could pull it off.
Yeah, it makes you wonder, what other creative things could they explore with this platform?
Yeah, we'll have to wait and see.
But I think it's time to maybe shift gears a little bit.
Okay.
And leave our listeners with a final thought. Yeah. Something to ponder as they continue their own research on FIGS.
Okay, I like it.
What do you think is the big question to consider here?
I think the big question is, if FIGS successfully executes on all these initiatives, particularly the international expansion and the Teams business, could they become the next truly global healthcare lifestyle brand?
Ooh, that's a good one.
Reaching far beyond just apparel.
It really makes you think about their long-term potential.
Right. I mean, they've already disrupted the traditional scrub market.
Yeah.
Could they do the same for the broader healthcare industry?
It's a compelling vision.
It is.
What do you think, listeners?
Yeah.
Could FIGS be the next big global brand?
Let us know.
We'd love to hear your thoughts.
And that brings us to the end of our deep dive into FIGS Q4 2024 earnings call.
Thanks for joining us.
Thanks, everyone.
We hope you found it informative.
Insightful.
And insightful.
And as always, we encourage you to continue the conversation.
Yeah, share your thoughts.
Share your insights.
Your own wild trade ideas.
Hit us up on social media.
Until next time.
Happy investing.